All right, we take profits, of course, at the closest fib levels or just the breakout of the market. At this kind of momentum plot, we have to be patient. I would consider to let the trades run, take profits at 151.7. Let's take a look now at the 1 hour chart. This is today's again 1 hour chart. So if this is an internal level 3, it doesn't really matter. The label is a big 3 or that internal very small 5 into 3. The rejection comes in at lower level 1s. All right. So it looks like we're going to get an ending diagonal, and this will just take us to 154.5, 154.47, 154.8, maximum 155.3. Remember that stop 155.8 is showing here. It's exactly 155.75 or 155.8. Usually this kind of move, there's a 1, 2, that 3, of course, once if we ever get to do that correction, will take us 161.8 into 5. We haven't really done the measurements, but of course everyone can do them. And I believe we're going to break 152. Of course, sorry, we're going to break 151.78. All right, so let's go live and check the entries and check what the 15-minute chart is doing, because it is going to be of very important relevance to us once we get a higher degree correction, if we get to have a higher degree correction. We just want to touch on another important projection here. It's actually what's happening on the market. We are bearish, of course, short term, but long term, we think this market is going to be bullish, very bullish as a matter of fact. This is taken from these triggers here on the weekly chart. The old momentum plots show that we're getting the same momentum plot right now. We had that same momentum plot that we're having right now back in 2013, and took us all the way to 2016. In 2013, actually, the Bank of England issued a new stimulus program. This, of course, drove equities higher, and prices took off right from 124, where we actually also took off now, all the way to 188 in 3 years. Now, this time around, of course, the fundamentals are different. There are higher interest rates. There are no stimulus. All right, so equities are not really going to be rising, but we have the same trigger, and therefore we expect that this is going to take us ultimately to a higher ending diagonal. You're looking at that ending diagonal here in white. There is this dotted line in red joining all the tops of these shoulders. It takes you to 170 ultimately, maybe towards the end of the year. More relevant and more important for us are the corrections, because this is what we're buying into. So according to these momentum plots here that we're showing, market becomes very choppy and the necklines are always tested. These internal cycles are simply sine curves and the necklines are always tested. A cycle like this one here, you actually broke below the neckline before the market moves higher. It's bearish, yes, but the necklines are always tested. Of course, here we have heads and multiple shoulders, and the momentum plot couldn't rise above overbought. Right now, today, what we're seeing is we are above overbought, so we would have expected not to have so much congestion, but it looks like we're gonna get congestion, and the neckline is always tested. So whatever, regardless of the labels, we were looking for a bounce at 151. Yes, many of us were looking for a bounce at 151 because this is a bullish market and would expect to actually respect the Elliott structure and respect that internal diagonal. But from what we have just shown, we're going to test this neckline. This neckline tests us 148 and 147. So the current move we're doing takes us to 148 and 147. Remember this older chart, we were looking at buying 151.22. This is, we believe, is not valid in line with the plots we are seeing. This is going not only to test the neckline, this is going to break the neckline and give everybody the implication that this is the bearish market, and then we'll take off higher. So you're going to be seeing 147.60. Okay, and you're probably going to be subject to this kind of, we are of course all going to be subject to this kind of structure. We're seeing upper heads and shoulders and lower heads and shoulders. This is a diamond. End of the day, it's going to be a diamond, and everyone, a big diamond on the daily chart, not yet finished, but that's what it could become. Everybody's going to be mixed up about where the breakout is going to be, up and down. We don't really want to bother with any of this at this point. We expect that it is going to be very bearish and look very bearish right now to serve our own short-term purpose, that we're trading this wave down, this wave here in red. All right, remember that stop at 155.75 means now that this is an internal 1-2, this is an extended 3, will take you all the way down to that dotted white line, 147 or 148 exactly, 147.96. Anything that you sell with a stop above 155.75 will make you profit gradually every day. I'm not saying we sell it and take it all the way to 147, but the market is so strong down that anything that you sell on a daily basis will accumulate short-term profits for you, just like selling a long-term swing right at, say, 154.5 all the way down to 150 and 149s and 147s. Right now, the most lucrative level that if we get to see we should just grab ourselves is this one, 154.5. Why this 154.5? Because this is the 61.8%. Remember what we do is Bitcoin, we're selling from one fib support to the next fib support, or one fib resistance to the next fib resistance, and 50% below it. So now we are at that level, 153.64. This is here current market 153.5, or at 50%. If we are going to do any kind of higher degree correction on the 15 minutes, on the 1 hour, you name it, we're not getting anything on the 1 hour. Any kind of correction would only take you to 61.8%. So resistance 154.5, 38.2% above it, 155. That's it. Okay, so if we get to see this 154.5, 154.8, very important levels to sell. Probably this is the only higher degree correction that will actually be seen in this current move, if it gets seen. If the market goes lower, it's not going to be seeing 154.5.